Welcome to this week's episode of Your Stock Request for the 12th of March. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Telstra, Austal, Coles and A2 Milk. So if you have a request, please send it through. Remember to sign up to the free newsletter. If you enjoy these videos, we'd love you to share them on social media and also leave a review for us on Facebook or Google. And finally, any advice here, of course, is general only. So this is the Telstra chart for the last year. As you could see, towards the end of last year, it looked like it was trying to head back up and retest that $4 level. But if I zoom here on the daily chart, what we've had is on this particular day is when they had their half-yearly results. So we can see that there was clear price rejection. And for the few days later, it struggled to make any headway. So that was a negative sign anyway. It was already heading backwards before the market started to get sold off. So despite it holding up okay here, I think the risk is still to the downside because of Telstra's poor result looming over it. So I think the risk is still to the downside with Telstra, and the other risk is because it wasn't doing a good job before the general market sell-off. I don't necessarily think it'll bounce as well as the companies that were doing a good job before the market sell-off. Okay, with Austal, so heading back like everything else, what I've noticed though is possible head and shoulders here on the daily chart. So what we've got is the first peak here in September, a new high in November, but big price rejection. And then again, it tried to rally, but fell short. So basically we've got these sort of three peaks, which gives us the head and shoulders. You could say that was the neckline, which has been broken. So we should end up with lower levels. Initially you get resistance at so what you do is you measure the distance from the neckline to that peak. Extrapolate it down where the breakout is. Okay, so that takes us to 250. So initial support. Initial support should end up at 250. Obviously, it's a fast-moving market, so support levels half the time are fairly meaningless. But if we look at sort of the longer-term chart, that does tend to make sense that 250 may well be a support level. Obviously, if we fly through that, I'd be looking at the prior level down here at $2. But either way, I think for the moment, ASB is on the way back. It's Coles. Let's move to a daily chart. So as we can see, over the last sort of week and a half, Coles has outperformed the broader market. Obviously, with all the panic buying that we're seeing in supermarkets. If we measure that initial decline with our Fibonacci tool, we could see that it found resistance bang on the 61.8% retracement level. Now that's significant because if this bounce was much lower, much shallower, then that would be a weak bounce. But the fact that it made it that far is a good sign, and it means that there is a good chance that this low may well hold in place. So again, provided the market doesn't, we don't continue to see these 5% down days, you may well see that $14 is the level that holds for Coles. Finally, A2 Milk. So this is another one that's been holding up pretty well compared to the broader market. It's still making its higher highs. We've still got the higher lows. So it's doing all the right things. So at the moment, it looks okay to hold. I think $14 is a fairly obvious, fairly major level for it. So in all the market turmoil, as long as it holds above that, I think it's fine. I think if it breaks that, then I'd be worried it's going to potentially head a lot lower. But I think for the time being, as long as it holds above that, it's doing all right compared to the broader market. All right, well, that's it for this week. If you have your request, send it through. I'll try to cover it next Thursday for you.